Hi, everyone. This is Chris Kimble with Kimble Charting Solutions, and welcome to August 5th production of Your Daily Five. And so before we go forward, I actually wanted to go backwards to the first time that we were honored to be on Your Daily Five, which was June the 23rd. And this was a chart that we shared. You know, as I was doing this for the very first time, I was trying to decide what can you really show that could have a lot of excitement and opportunity for investors. And this was one of the charts that came to mind. And this is a chart of coffee. And so we've been sharing this with our members for many months, but let's go backwards to the chart that we did on June the 23rd. What I'd noticed, we love long-term charts, and this goes back almost 40 years, but you'll notice that coffee had created in these blue shaded, they were long-term bearish falling trends. And obviously nothing fancy about the analysis, but the bottom line where the green arrows were is finally when these downside trends broke to the upside, coffee did really well. And so the average gain coming out of these long-term fallish channels by coffee was 200%, with the smallest one being 100% in a year. So even if it was just a halfway performer, that was obviously a very spectacular rally. And so the reason I wanted to show this 6 weeks ago was that coffee looked to be making a similar pattern for the fifth time over the last 40 years. And so what we shared with on June the 23rd was this, is that it appeared that coffee had broken above the rising channel and was testing the top of the channel, which was old resistance's new support. But at the same time, it was testing also this long-term, this 18-year rising support level as well. And so this was one of the five charts for the daily five that we showed on June the 23rd due to what I thought was one of the best opportunities that I could share with all of the listeners and viewers. So I wanted to share, what has happened in coffee over the last 6 weeks. And the odds are that most of us participate in drinking coffee, but it's been a great place to avoid now since 2011. As you can see, coffee was trading above 300, and here we are below 100. So despite probably our regular consumption of coffee in the morning, coffee has been a great place to avoid, but I wanted to share with you why I thought it would be a great place to enter on to the long side. And so in the last 6 weeks, I just wanted to kind of share the S&P's done well. You can see here on the right, the S&P is up 5.6%. Gold's done well. It's obviously in a bull market of itself, up 13%. But even though gold is hot, you can see that coffee has almost doubled gold in the last 6 weeks. So coffee's up 25%. So if these long-term patterns are right, even though coffee is up 25% in the last 6 weeks, don't forget that the average rally coming out of these long-term trends was a 200% gain. And so here's an update on coffee. You can see that this is from StockCharts, the relative performance over the last 6 weeks. This is a weekly chart. You can see it's up 25%. One of the stronger rallies that it's experienced since 2014. It is breaking above a short-term falling resistance line. Keep in mind, this is that long-term trend line coming into play. And so it's acting positive, creating a series of higher lows. These are a couple of resistance lines, but if coffee, to me, the key level, and I didn't put a Fibonacci level on here, but happens to be this 140, that this is resistance. But if coffee does break above resistance, look for it to rally from the 140 to 170 level, which is still, as you know, a very large percentage, over 25% above that breakout level. So positive news is coming from coffee. Looks to be a really good trade. And again, these long-term trends tend to our long-term trend channel breakouts tend to provide really quality longer-term investment opportunities. So last week in the last daily five that we did is I shared how the Swiss franc and gold, when they break out together, really send positive bullish messages. And so you'll notice that the franc is on top and the gold is on bottom. And when they both broke out together, from these lower highs over a period of 7 years, both rallied and just created a series of higher lows for 9 full years. And so when the franc broke out, it rallied essentially 100% in 9 years, and gold rallied from 350 an ounce all the way up to 1900. So as I shared at the last daily five that we did a few weeks ago, is that gold was breaking above a similar looking pattern to what it made from 1993 to 2002. It was breaking above it too, but so far the franc hadn't joined in on the confirmation of the bullish message to the upside, but it was testing resistance. And so the key message that we shared at the last daily five is that if the Swiss franc would break out to the upside at 3, it would send a long awaited confirmation from a key currency that is highly correlated. And if the franc did break out, it would send a long-term bullish message to anyone that wants to be long gold and silver and potentially copper as well. So here's an update kind of on how the Swiss franc is doing. You can see that it's fairly much traded sideways over the last 5 years between 95 and essentially 110. But it's had a lot of positive price action since the beginning of 2019. It is testing the top of its trading range. And so the takeaway here is if the Swiss franc can break above 110, look for it to rally at least another 5% to the 115 level. And then there's an unfilled gap and the high of the year 2015 at 120. And so as you all know, a 5% move may not sound exciting in gold, and we've seen Silver Lake can do that in almost a day. But if we could get a 5% move in a currency, you can bet that the ripple effects in the gold and silver market will be much more than a 5% upside move in the Swiss franc. So again, don't take your eye off the Swiss franc as a confirmation bullish message to the gold and silver markets. And speaking of gold and silver markets, we've tried to share in each of the daily fives that we're doing a long-term chart, trying to apply Fibonacci and bringing up the comment that it seems like charts have memories. But this is a 35-year year chart on silver based upon a monthly basis. And you can see that silver created a double bottom here in 1990 to 1993. So we applied Fibonacci to the lows of 93 and the high in 2011, just short of 50 bucks. But the thing that I find fascinating is that in this blue shaded area, silver traded sideways for nearly 7 years. And it's just, it gets me is that look where it traded, folks. It traded between the 23 and 38% retracement level. It struggled with 38 and it found key support at 23. And look at this, one of the largest bullish reversal patterns that you can find in silver anywhere on this chart took place on a fake out of this trading range back in March of this year. And that most likely had to shake a ton of the long-term bears out in silver, and then it created this bullish reversal, rallies up, and then what's it do just past month, in the month of July? It breaks through the 38% retracement level and just rockets from the 38 to the 50% retracement level in a matter of a couple of weeks. So silver is now testing its 50% retracement level, which was also support here numerous different times. And again, everyone, this is a monthly chart around the $26 level. If silver can succeed at taking out the 50% retracement level, look for it to have some type of an experience of what we saw in breaking above its 38% retracement level. So the next key resistance level above the $26 range is around $36. So that's a big percentage move ahead. So watch for continued further price action to the upside from silver on an upside breakout of $26. So speaking of the US dollar, looks like a king dollar double topped here. It's breaking rising support, and the resistance of the trading range is around 89. And so again, a key currency of king dollar continues to break the support line. It could fall another 4 or 5%, similar to the franc going the other way. If the king dollar does continue to weaken towards the 89 area, expect gold and silver and even copper to do relatively well. And speaking of copper, this is a chart of Freeport McMoRan. Obviously, it's in a long-term downtrend, but it's testing this $15 level. And if it breaks above the $15 level, everyone look for it to shoot quickly to the $19 level. So thank you for joining us today on Your Day 5. Again, this is Chris Kimble. This is my 40th anniversary, and we have a 40% off special for StockChart members. So you can see this special at kimblechartingsolutions.com/StockCharts. Take care, everyone, and be safe. Thanks again for watching Your Daily 5.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.